Different currencies have different interest rates. Some enjoy higher interest rates than the Singapore fixed deposit. However, there's exchange rate fluctuation that could result in capital gains or loss. Overall, which leads to overall return loss, gain or loss is equal to the interest rate gain plus exchange rate gain or loss. Investing in shares. Investors expect dividend income or capital gains. Investors usually invest through stockbroker, dealer, or remiser. Stockbroker earns commission for the order executed buying and selling of shares and selling of shares. Under ESA, Electronic Shares Application, it applies for new shares with ATM card, basically an ATM machine. Funds can be debited from the applicant's account directly. Refunds for unsuccessful applicants are collected back directly. It's convenient for customers to do so, and banks will benefit from shorter processing time. Overdraft is secured by shares. You can secure up to 40 or 70% of the share's market value. The OD amount depends on the customer credit standing, the types of shares, either blue chips or penny stocks. Let's look at this diagram here. On the y-axis is share price, x-axis is time, and the top here is call margin call. So we're going to find out when the margin call will be issued. The moment you borrow money at the very start, that will be the initial margin. So when is the margin call activated, triggered? So it's when the share price drop below the maintenance margin, which is here. And that's where there will be a margin call, when it drop below the initial, drop maintenance margin. And you have to top up. Okay, when it's top up, then after that, then the shares will go on until you drop against below the maintenance margin. As long as when it hit below the maintenance margin, there will be a margin call. This is margin call. The margin trading services is a non-checking, basically no check overdraft facilities. The usage to invest in shares only and nothing else, only for investing shares, and no other purpose or usage. So credit could be 1.5 to 3 times the the shares value. Unit trust is pooling of funds from small investors by fund managers company. It's managed by professional fund managers. Invest in securities, shares, and bonds, and all bonds. Also, trust deeds to bind the fund manager, trustees, and unit holders. Basically, unit holders are the investors, other investors. The securities invested are governed by the trust deed objectives. Unit trust is an alternative for investors who are with small sums of capital. Basically, for investors with small sums of capital, but want a wide variety in their portfolio. Investor has to trust the fund managers to make investment decisions. With many choice of unit trusts, investor can choose the one that is most suitable for them. Structured deposits. Fixed deposit with underlying investment product. Maturity is short to medium term, 1 to 10 years. The main attraction is the potential of additional or higher returns. It's linked to the performance of the underlying investments like stocks, stock index, bonds, foreign exchange, and interest rates. Factors to be considered in selecting basically investment selections. Investors should know their own financial needs and financial objectives. What are the considerations they have? The financial needs and time horizon. How basically do they need the money in short term or long term? And how long they can willing to wait for the investment. Also talk about the risk versus return. Definition of insurance. Insurance is transfer some risk to professional insurers in return for payment of premiums. Agree to indemnify the insured against loss suffered. Premiums are collected from many insurers and funds are set aside to meet payout obligations, plus balance to be invested. A contract indemnity against events which may or may not happen. Insurance is the uncertainty whether the event will happen. Assurance is the uncertainty when the event will happen. It will happen, but the question is when will the event will happen. In practice, the term insurance is used to include assurance. Whole life insurance. Lifelong protection. The sum insured payable upon death or total or permanent disability, in short we call TPD. Premium is payable throughout lifetime. Cash or surrender value after only occurs, is available after some years. You can terminate the policy in return for cash. Policy can either be with profits or without profits. Terms insurance. The protection during the term only. The sum insured payable upon death or TPD. The premiums payable only during terms. There's no cash surrender value. A maximum protection at a low cost. Endowment insurance is protection for a term only. Purpose is accumulate more for accumulation of savings. Sum insured payable at the end of the term or upon death. Premiums payable only during the term period. Has a cash value. Policy can either be with profits or without profits. Life annuity insurance. It provides a regular income during the retirement. Is linked to investment. The way investment can be a lump sum or payment over a period of time. On maturity, the policyholder receives regular income for life. Investment-linked insurance is offer protections, death, and permanent disability. Investment, capital appreciation for underlying unit trust investments. Savings, funds are set aside regularly. InsurTech. It basically is insurance technology. It offers individual customized solutions to life risk. Uses data analytics, sensors, wearables, and cell phones data in ways. Now the focus is the person is now the product. InsurTech. It basically is insurance technology. It offers individual customized solutions to life risk. Uses data analytics, sensors, wearables, and cell phones data in ways. Now the focus is the person is now the product. Securities X, Future X. These are guidelines on licensing, registrations, and conduct of business for fund management companies. It's applicable to fund management companies, in short we call FMCs. in minimizing licensing criteria for the licensed FMCs, eligibility criteria for registered FMCs, also conduct a business requirement for both LFMCs and RFMCs. Financial Advisors Act. Financial advisors are licensed and regulated under the Financial Advisors Act, in short called FAA. It needs to harmonize the regulatory regime for similar activities across investment products. FAA streamlines the law governing the provisions of financial advisory services. Regulations. The government aim in regulating is to make Singapore the premium insurance hub of Asia. Implement the Financial Advisor Act. Only licensed professionals who have minimum qualifications and sound basis can sell investment products. Singapore government recognizes the potential of fintech in shaping traditional insurance businesses. MS has been actively making policies to promote digital innovation. Robo-investors are the digital platforms that provide automated, algorithm-driven financial services with little to no human supervision. Insurtech companies are responsible to ensure robo-advisors comply with FAA requirements. Reasonable basis for robo-advisors to recommend any investment product.